What do you mean by dividends? Dividends are the vehicles which are used by industry to offer its gain to shareholders. They are an important element of how shareholders are rewarded for their investment and ownership in a firm. A company can issue dividends to shareholders when it makes a profit. Profit is the amount left over after a company has paid its expenses and tax liabilities, example corporation tax. The amount of a dividend should not exceed the amount of profit, after tax, available to pay the dividend. The directors of a company are responsible for deciding the value of company dividends, as well as managing payment. However, shareholders themselves have right to vote, and they also approve dividends through their voting rights. There is no commitment to the directors to declare a dividend. Dividends can be paid in a variety of ways, such as by the additional distribution of stock shares or any other property. The most common way to pay dividend payments is by cash. Retained earnings and dividend types. When a company makes a profit, the majority are often classified as retained earnings, that is money which is used to perform the business going forward. Generally, a company will be using the remaining amount of its profit, after retained earnings have been taken into account to form the core of all its dividend payments. Sometimes a company will be using retained earnings to keep paying dividends in coming years, even though it has not made significant profits, to keep shareholders happy. The amount of a dividend payment is up to the discretion of a company's board of directors, with final dividend amounts being subject to shareholder approval. Comparably, the time frame of dividend payments may vary from industry to industry. They can be paid monthly, quarterly, biannually, or annually, depending on the situation. This is normal for a company to issue two dividend types: interim dividend, issued during the year, and final dividend, at the end of the year. Shareholder permission is required only on the final dividend, that is the end of the year dividend. Dividend dates. Important dividend dates include the announcement date, that is when company management announces the nature of upcoming dividends. The ex-dividend date, or ex-date, indicate the date after which shareholders buying stock will not qualify to receive the best dividend. The payment date indicates the date on which the dividend payments are made. Why are dividends paid? There are a lot of reasons a company would like to pay dividends to their shareholders, the primary one being seen as a reward for investment and ownership, in other words, as compensation for trust. Trust. Shareholders show their trust in a given company by buying a number of that company's shares, and it's expected that this trust will be compensated. The trust of a company's shareholders is an essential resource, and if a company constantly ignores paying dividends, it may result in investors to sell their shares collectively. Tax. Dividend payments are usually taxed at a lower rate than salaried income, plus there is a £2,000 tax-free dividend allowance, and there's no need to pay national insurance contributions, NIC, on dividend income. Therefore, dividend payments are common among shareholders. Before we go to the next point, I would like to tell you that this video is sponsored by rtrsupportslimited.com. RTR Supports Limited can provide UK company and bank account in one day. Please visit rtrsupportslimited.com for more information. Company image. There is the benefit to a company's image. If payment is made consistently, then that industry is going to be perceived trustworthy. It will help to encourage more shareholders to invest over time. If the dividend rises year on year, this can be a huge indicator that the company is in a good state of financial health. Shareholders also invest in a company to retain specific controls over it. They have several rights and can make sure that the directors do not overstep their delegated powers. The shareholders also retain the power to make major decisions affecting the business, which they typically exercise through voting on resolutions at general meetings. Thus, it is essential to understand dividend payments are not the only reason for investing in a company. Thanks for watching. Please share your reviews and ask if you have any questions regarding this video in the comment section below. We'll answer you shortly. Also, don't forget to like and subscribe to our YouTube channel for more such videos.